is Lisette Cipriano. I am a digital finance specialist, and I will be your master of ceremony today, as well as the moderator. Formally, I would like to thank you for attending the Finance Sector Group's webinar on remittances in Asia, the impact of COVID-19 and harnessing digitization aid recovery in Asia. We have an hour and a half to discuss the importance of remittances in general to the Asia Pacific region and the role of digital channels in supporting the continued flow of remittances. We have here Leon Isaacs, founder and partner of DMA Global, who will present the findings and recommendations of the digital remittances paper that we worked on. DMA Global is an international development consultancy specializing in remittances and all related areas such as financial inclusion, diaspora engagement, and payment systems. We also have our colleagues from our regional departments who will highlight use cases in digital remittances. We have Mayumi Ozaki from SARD. She will share the Bangladesh experience, and Ali Shah from CWRD, who will talk about the Russian digital account in Pakistan, which is making some, very good success in their rollout. So we have a lot in store for you for this afternoon. But before we start, I would just like to remind everyone to keep their mics on mute if you're not speaking. For questions, please raise your hand on the button that's found on the top of your screen. And then we will call out your name so you can ask your question. Or if you prefer, you can also place your questions in the chat box as well. And so without further ado, I would like to invite our relatively new SDCC Director General, Bruno Carrasco, to open this webinar. So over to you, Bruno.
All right, so thank you very much, Junkyu, Lisette, and colleagues. It's a real pleasure to be here. I've always had a soft spot for this very important area, and I guess I wanted to begin by bringing the importance of this work into context. So let me begin. Remittances, of course, have come to represent a very important lifeline for many poor and impoverished households, and is very much part of the solution to helping to improve the livelihoods and overall poverty alleviation. It also often at times operates on the margins of the formal economy and can lead to challenges in the transfer of funds, be it through larger transfer fees, lack of transparency, and or deviation of funds. For that matter, I look back at the work that we did back in 2015, and some of the colleagues around the table were very much part of that work, where we organized with colleagues in SAPF an international forum on promoting remittances for development finance. And then as part of this initiative, there was a publication on migration and remittances for development in Asia based on discussions from that forum. I am pretty sure that still many of those recommendations may very much apply. Now, given the sheer size and the importance of remittances in the region, the study came out with a number of recommendations, including that remittances are susceptible to external economic and political conditions, as we've seen on many occasions. The payment infrastructure and financial products should be further developed for remittance flows. And then thirdly, concerted efforts by the public and private sectors are needed to leverage remittances to develop viable local industries and generate employment opportunities at home. So that work coincided with some work that my colleague Mayumi worked on in terms of developing a payment system for small value transfers in Bangladesh that served to lighten the load on remittance payments. So that was all good, and it's something that I look back with fondness, recognizing that the importance of that work. Now, of course, we move fast forward into 2020, and at the height of the COVID-19 pandemic, two countries, Switzerland and the UK, have launched a call to action to support the remittance industry, and in observance of the upcoming UN's International Day of Family Remittances. This was done in partnership with other multilateral organizations, including the Asian Development Bank, with particularly the financial sector group that we have here, and its institutional representatives. An upcoming study commissioned by ADB looking at remittances in Asia supports this call to action, so it's very timely and we're very closely aligned to that work. The study focuses on the development and scaling up of digital remittance channels for migrant workers and families to ensure a continued flow of cross-border remittances. Putting into perspective the flow of funds from abroad, we can present the figures for 2019. And here we see that Asia is very much the largest remittance receiving region in the world, with about $325 billion in formal remittances, and that accounts for approximately 45% of global flows. Such funds, again, help families cover day-to-day costs, pay for children's education, cover health expenditures and startups and small businesses. The remittances are also a source of foreign exchange, and that's very important to note for many developing Asian economies. Last year, remittances in the 5 top receiving countries accounted for a significant proportion of their GDP, including Tonga at 40%, Tajikistan at 26%, Kyrgyz Republic at 25%, Nepal at 23%, and Samoa at 17%. Clearly, cross-border remittances bring many economic benefits and contribute to national development and financial inclusion. Remittances and the ecosystem that it operates under continue to face important challenges. Just to highlight a few, going back a little bit to what I mentioned earlier, the first challenge is how to lower the cost of sending money, which is mostly borne by low-income migrant workers. Another one is how to make transactions more transparent while ensuring that efforts to reduce or remove risks from the remittance process do not have unintended negative consequences that compromise efforts at enhancing financial inclusion. Other challenges exist, including how to make compliance more efficient, particularly to prevent money laundering and terrorist financing, and how to speed up cross-border transactions, including how to drive competition in the marketplace. And this is key to be able to look at a more affordable set of fees for transferring funds. We can go on with many other challenges, but I think all of you get the picture. Now, thankfully, the transformative power of digitalization can help address many of these challenges. So we've got a solution, and for years now, digitalization has been changing the way people interact with the financial service providers and the way they transact with money. We have indeed seen a positive impact on remittances, speeding them up and making them more affordable and efficient. In today's webinar, we will share with you case studies from the Philippines, Malaysia, and Pakistan, highlighting their digital success stories. For all of us, the impact of COVID-19 has also made clear the importance of digitalization, within the financial sector and including the remittances industry. As countries responded to the pandemic with restrictions on movements, banks and other financial services providers quickly turned to digital processes that required no in-person dealings. So there are opportunities that are coming out from this crisis. As the pandemic enters a new phase, many in the industry are looking forward to building on this success. If indeed digitalization is to continue this trend, regulators and policymakers will need to provide more support to ensure that digital innovations continue and solve some of today's challenges, and that consumers, of course, are protected. Future success likewise depends on private sector resolve to continue to build safe and effective services. Coming towards the end now, the Asia Remittance Study that features today lays out 10 policy recommendations for development of digital remittances. And these, we hope, will do 3 things. First, it'll accelerate digital innovation in remittances. Second, it will scale up benefits of digitalization to migrant workers and their families. And third, continue to alleviate the challenges of this pandemic. Last but not least, I'd like to thank my wonderful colleagues where we work together in SAPF, both Mayumi Ozaki, who's currently in SARD, and Syed Ali Mumtaz Shah, who's now in CWRD, for their participation and valuable inputs in today's webinar. So again, thank you very much. I'm delighted to be here. We hope that you find this digital remittance webinar insightful and valuable, and also helpful to our operation department colleagues. So I wish you a very constructive afternoon. Thank you very much.
Thank you, Bruno. Bruno, before you go, can we take a picture with you? Because, you know, we need to make sure that we capture this very important event. I'd like to ask the rest of my colleagues here, the attendees, if you could switch on your video so that we can do a screenshot. Tomo, good to see you.
Happy faces.
Happy faces.
Okay.
Chào Hong, hi.
Hi,
Hong Kong
Aiko.
Shy.
Hi, Jake. Good to see
Hey,
you. It's nice to see your faces. Right, we can do a screenshot now. Miles?
Okay, yeah, 1, 2, and 3. For a while, another shot. I'll count again. And one more. 1, 2, 3. 1, 2, 3. Game. That's it.
All right.
Thank
Thank you so much.
Miles,
Thank
Gigi's
you.
photo is okay? Miles?
Yes,
the
yes,
least
sir.
of importance.
This is first photo and DG participating of our SDCC seminar, right? Okay.
Excellent. That's good.
All
All
right.
Thanks so much,
Very good.
Bruno.
All the best. Good luck.
Thank you.
Thank you.
So
Bye-bye.
without further ado, I'd like to turn the floor over to Mr. Leon Isaacs, who will talk about the paper today.
Great. Good afternoon, everyone. Good morning, I think from, well, no, it's good morning here. I'm based in France, so not so far from Lisette, but given the current travel restrictions in Europe, it seems like she's the other side of the world as well. I've prepared some slides, so I'm just going to share my screen with you, which hopefully you can all see now.
Yeah.
Can you see it?
Yes.
Perfect. Okay, so it's my pleasure to be with you today. I'm going to talk about my favorite topic anyway, which is remittances. And I'm just going to take you through an overview of the Asia region, although the Director General has done a great job there, so that will save some time for me, I think, and really share with you, I think, three sort of key areas. One is the overview of Asia. Secondly will be what impact has the crisis had. And then thirdly, generally the challenges with remittances and what some of the solutions are to them. And as has already been flagged, and you all know anyway, digital solutions present many of the solutions to what we're trying to look at. So I'm going to cover these areas. I'll share briefly some case studies with you on Malaysia and Bangladesh, and then one of our colleagues is going to cover Pakistan as well. So hopefully we'll be able to cover quite a lot of ground in a short period of time. I should say that most of the information for this webinar and the accompanying paper have really come from two sources. One is clearly desk-based research, such as it's available on remittances. And then the second one, and probably more importantly, is discussions with a range of stakeholders throughout the Asia region, ranging from Tajikistan down to New Zealand. And those have included central banks, other policy makers, private sector operators, and so on. So we've had a broad range of input here. And I think, you know, the conclusion really is that remittances are a lifeline for many users. And I think we always have to start with the users and remember these are people who are trying to improve their lives for their families and their communities. They're important in Asia, but they vary dramatically. We have the largest populations and the smallest populations, and there are big differences between how remittances operate in those countries. And then that with all of it, with all of remittances, there's a lot more attention on it now than there used to be, but we still have many, many challenges to overcome. But we have a lot of global attention on remittances that wasn't there before. So in a perverse way, the crisis has actually provided an opportunity to address some of the issues in remittances that have been there for many years. So just running very quickly through the migration picture, obviously the driver for international remittances, and we're talking really about international remittances today, so cross-border remittances, is migration. And we know that over 84 million migrants worldwide come from Asia. And you can see from the chart, we've really plotted the size of the diaspora, which is the blue bars. And then, I'm sorry, I'm colorblind, but I think the thin line is red, is really showing you the diaspora as a percentage of the population of individual countries. So this is really showing us, for those countries where there may not be many actual number in absolute terms of migrants, for many of those, remittances are particularly important because they have a very large diaspora outside. In terms of where the migrants go, the Middle East actually, not surprisingly, as we all know, is the main receiver of remittances from South Asia and Southeast Asia. But you've got specific pockets. So Australia and New Zealand are the main destinations for those from the Pacific Islands. And in general, the USA and Europe are particularly big destination regions or countries for most people. And then finally, there is a lot of migration, again, as you all know, within the region. So we've got quite a mixed picture there. So this translates into remittances. I know that DG gave an updated number of 325 billion sent to Asia. In the year before, it was just over 300 billion. And yes, that does represent the largest received region in the world. The absolute values are driven pretty close match to the size of the migrants. So we see India is the largest country, People's Republic of China second, as we know. Philippines, where remittances account for roughly 10% of GDP, is third. And then Pakistan, which has grown considerably over the last 10 or so years, is very high in Vietnam. So all of those are in the top 10 received countries around the world. But I think it's as important when you look at how much does remittances contribute to the GDP of the individual countries. And as was already flagged, there are quite a number where it's actually over 20%. So these are really significant numbers. And of course, we'll see the impact that COVID has had on these. But actually, just as a forewarning or a positive story, generally, the impact of COVID has not been as significant as feared so far. I think we'll have to see, obviously, how it plays out as we move forward. So looking now at, whilst all of that is sort of good background, I think let's go into a bit more detail and look at the pricing, which would generally be regarded as too high. So you can see on the chart, there's a representative pricing. This comes from the World Bank's remittance prices worldwide data and other sources where necessary. What it's really showing is, I think there's a couple of points that are important here. One is the red line or the horizontal line through there shows that at the current time, the average cost to send $200 around the world, the global average is 6.51%. If you look at the cost to send to Asia, you can see that it varies. There are a number of countries that are below that, which is encouraging. You've got a few, Kazakhstan, Azerbaijan, and so on, that are significantly lower, largely because the most of their money comes from Russia and there are no foreign exchange margins involved. Normally people send ruble and collect ruble. They may then convert it, but generally speaking, they're much lower. And then you're going all the way up to some of the other countries, Cambodia, Vanuatu, and so on, where we're looking at plus 10%. I think having said all of that, we need to keep in mind that the Sustainable Development Goal 10.C says that remittances should be on average less than 3% by 2030 on a global basis, and no individual corridor should be above 5%. So you can see there's quite some way to go in most countries. The other thing is that if you look at how the prices are determined, everything is composed of a fee, and in most cases, not all, most cases, a foreign exchange rate. But the difference between them is quite severe, and we're going to look at that now as to what are the challenges with remittances. So we already heard a few from the Director General. I'm going to repeat a couple, but I'm highlighting 6 here. There's plenty more, but that would take probably most of the rest of the day to cover. So I'm going to move through these reasonably quickly. So the first one is the high costs that we heard about. There are a number of reasons for these depending on countries. And again, apologies, but as we're talking about 50 countries in Asia, it's different and different sizes. We do have to say this is a generalization, and we need to actually, as the next step, drill down into individual countries and corridors. But generally speaking, in many countries, there's still a lack of competition, particularly on the send side for options to be able to send to countries. What we are seeing is, in the past, there used to be a lot of exclusive agreements between money transfer operators, so that a sending money transfer operator restricted a paying out operator to only offer their service. That has generally gone away or is going away. So most of the lack of competition we're seeing at the moment is on the sending side. Secondly, I think most importantly, the vast majority of transactions still involve cash. Sometimes cash to be paid in and cash to be paid out, and sometimes the use of cash at only one end. And the problem with cash, well, there's lots of problems with cash, but the main one is that the business model that's being used to run them generally, well, has to involve agents, often at both ends, and you can end up with value chains where you've got 5 different entities. So you've got a paying in agent, they're a master agent, then you've got a money transfer company in the middle, and then on the paying out side, you also have an agent or a bank, and then they might use sub-agents. Each one of those 5 entities wants to earn money. So it makes it very difficult if you're operating that value chain to really reduce costs. On top of that, in more recent years, quite rightly, there's been a greater emphasis on compliance, know your customer, and those types of costs. But the challenge with that is that it means companies are having to employ more people or put in place better systems. So the costs have really increased. And for many money transfer companies now, KYC and compliance costs are around 10% of their operating costs, whereas in the past it was probably 2 or 3. So it's just something to bear in mind. And then the other reason, one of the other reasons for high costs is undoubtedly de-risking. So I think, again, you're probably all familiar with that, but this has been a significant problem for many years for the remittance industry. It got particularly bad around 2012, 2013, and hasn't really improved much since then, I would have to say. It's basically where banks refuse to open accounts for businesses based on the industry that business is in, regardless of the underlying fundamentals of the individual company. And the problem with that is that if you can't get a bank account in most countries, you can't operate. Or what we're seeing now is that for these companies to maintain bank accounts, they're having to pay significantly higher fees. And the challenge ultimately with that is not only do we have high costs, but it actually means that some companies have gone out of business and we know that people will continue to send money. So if they can't send it through formal channels, they're going to send it through informal channels. It's interesting, just as an aside or a main part, is the problem is well recognized and has been well researched over the years. And now there are good examples in Asia where there are actually pragmatic approaches being taken to try and improve this area. The National Bank of New Zealand, with others in the region, are working on a remittances project to basically try and develop a regional KYC tool and approach to try and actually identify customers digitally and to provide reassurance to banks who are then judged on the customers that they work with. So in this case, the remittance companies. And ADB itself, as many of you know, is supporting the development of a KYC utility in Samoa. So good to see some things starting in there, but it will be a long way to go. Now, I already talked about cash, and I think I just wanted to sort of flag that people really use cash partially for some, because that's the only option, but others actually have chosen to use cash because they actually feel it gives them more control over the transaction. And there's a strong element of trust, as we'll see. Many people are quite distrustful of digital services. But the thing with cash, when you do research with consumers, they nearly always say the thing is they can look the agent in the eye as they hand the cash over. And then if something goes wrong, they know where to come back to and who to talk to. So that's quite a strong barrier, as long as a lot of other reasons, obviously. But the other thing is, at the moment, there just aren't enough digital options available. And digital is not just mobile money, which, of course, has been very successful in parts of Africa, has not taken off so much in Asia so far. But there's a lot. What's strong in Asia is crediting accounts of one sort or another, whether it's a bank account or a mobile wallet. We're seeing strong growth there, but what we need is a lot more. And then the other reason is, this one around lack of financial education. This comes up time and again when you talk to people. They're just not aware of or don't understand the different options to them. And as I said, there's particular concerns about scams, frauds, and then also over privacy of data is a big issue for many. So these are some quite significant challenges to overcome. And if we think that cash is 70 to 80% of the market at the moment, it's a big opportunity, but we need a concerted effort. So we talked a little bit about informal. I think most of us know what they are, but they vary. So you've got personal hand carrying, which would have declined during the COVID situation, for sure. Where there's land borders, you tend to find there's a lot of informal remittances. And then there are some where actually it's not cash at all that's going, but it's goods and services. So those are sort of more informal, I would say, or personal informal. Then you have organized informal, which is the hawala and the hundi type of systems, which are generally very organized and built on trust between the operators at both the send and the receive side. They're lower cost. They generally, they don't require identification. And what's interesting is when you talk to customers, some of them know that they're using a formal service, but many people don't know. Even if you try and use different terms to explain formal and informal, they really don't know whether they're using a service that's regulated or registered at all. And many of them don't actually care as long as the money arrives, or they trust the informal service even more. The next point would really be that these informal services are a problem if in many reasons. One is there's no customer protection, but then for governments, obviously there's a high risk of illicit transfers, and where foreign currency exchange is involved, often that currency doesn't land in the receiving country, which really impacts their foreign exchange balances and has a broader impact on the economy. And I think finally, whilst there's a lot of efforts that have been made to try and address the informal areas, and the ones that seem to be most successful are those that actually compete with the benefits of informal, rather than just try and drive them even further underground. So bringing in official schemes. A Pakistan Remittances initiative is a great example of this, and brings in all the benefits that the informal has, but with less risk to the customer. I'm just going to talk briefly about regulatory environments. We can't have a discussion on remittances without that. A couple of things here. One, for the money transfer operators' viewpoint, they suffer because many countries have different regulations from each other. And if you're trying to operate a regional or global business, you need to invest a lot in your legal structure and framework to comply with all the different regulations. You have to design different systems and so on. So for them, they would prefer as much commonality or common standards as possible. And also, the time that it takes to approve licenses can sometimes be very long and actually take all the momentum that a company has built up out of them, so they don't move as quickly as possible. And I think the other thing is there's a lot of call continually to license the product, not the entity, rather than the entity offering it. So if somebody's offering a cross-border payment of low value, the control should be proportionate to the size of the transaction, and it's around the controls in the product. And of course, you have to make sure that the companies offering it are fit and proper, but you don't have to put in all the restrictions that are currently in place. And then finally, we've got to this point in today's session, and hopefully I've conveyed numbers with some sort of conviction, but actually there's very unreliable and lack of consistent data in the market. So there's a lot of assumptions need to be made in many cases, or there's just not availability even of total flows, and certainly flows by country. There are some really good examples in Asia of where this issue has been tackled. But generally speaking, we really don't know enough about the flows. We certainly don't know enough about what types of product are being used to move money around. And then I think the other thing is we know not as much as we should about the senders and receivers and what they really need. We have very little data on gender, although a bit more is coming on. And if we had more data, it would help bring more informed policy, and it would really help not just the policy, but also the operators to deliver better products for the consumers. So just moving rapidly on to COVID, just to say that when this time last year, I guess, when the pandemic was just starting to make its presence felt, generally the picture, certainly coming out from the World Bank and others, was for a very, very big global decline in remittances of over 20%. Actually what happened was in April and May, things were bad. There were major falls as countries had big lockdowns. People weren't able to go to physical locations to send their money and weren't aware of other choices. But as the year proceeded, things recovered in many markets, not all, but many markets, so that by the end of the year, the World Bank had revised their forecast to a 7% decline for last year, but then another similar sort of decline for this year, with actually this year being forecast worse for Asia than last year. Have to say that generally speaking, we haven't seen it as bad as that, although I think in a couple of weeks the World Bank will issue its numbers that they saw for last year, so we'll have a better idea. But in Asia, we've seen countries, as you can see here, Bangladesh has delivered a strong rise, Pakistan similarly, and Fiji particularly as a result of some mobile money work that they've done there. has also really increased, but countries like the Philippines managed to maintain almost, I think it's 0.8% decline in remittances over last year. So actually the performance has been pretty strong throughout and much better than forecast. And I suppose we all want to know why that is, and nobody knows absolutely, but I think one thing that seems to be pretty consistent is there's a general belief that there's been a fall in informal remittances, partially because or largely because people haven't been able to travel in the lockdown. So that's not only people who are hand carrying, but it's also for those businesses where settlement was taking place in cash, and you have people carrying suitcase loads of money to make settlements in the receive country. Those efforts have been stopped as well. So that's been very, very difficult. And some other local things like exchange rate has a pretty big impact. And we've seen in places like Nepal, that sort of helped as well. But I think, as the DG said, the other thing with COVID is that it has changed how people operate in many cases, and has really been a catalyst for getting people to use digital. Because they couldn't get to physical locations or found it difficult, many people switched to online sending in particular, and that's driven a change in how the money is received at the other end, particularly if it's gone into a wallet and so on. So, globally, it's estimated that digital remittances may have increased from around 10% of the total to somewhere between 20 and 30% in the last year, which is actually great news because digital has been one of the key drivers or key areas of promise for remittances for many, many, many years. But one of the problems is that its uptake or adoption has been very slow. So things are slowly starting to change. And why do we think that digitization is a good thing? I think, first of all the evidence at the moment shows that mobile-to-mobile payments, as an example of a digital payment, are around half the level of the global cost of remittances. And that's largely because, if you remember, I was talking about the number of people in the value chain. You are taking most of those out. If I'm sending you money from my mobile wallet, it is only going through the money transfer operator or the mobile network operator, or possibly a partner at one end of the transaction. But basically, people have been removed from the value chain, so it's easier to transfer money. Secondly, I think digital is great because it credits an account or a wallet, which is obviously a form of account, and that really helps with enhancing financial inclusion. And then we've got other natural areas that digital brings around transparency, efficiency, convenience. Obviously, if the money's arriving into my wallet and if I can spend that money digitally in the receive country or from my account, I keep using mobile, but bank accounts are equally an equal solution. I don't need to go somewhere to go and collect it, and I can spend it when I want, and it's safe and secure otherwise. So it has many advantages. There's improved access with digital. There's over 5 million agents across the world that money can be used at if people do need to cash out. And the final thing is, in terms of SDGs, digital addresses 14 of the 17 of those. So I just wanted to talk very briefly, in the interest of time, about a couple of case studies. So the first one would be the Philippines. And I think, one of the key things here is, although I briefly talked about digital and made it sound quite straightforward, all the evidence around digital is that it will only be successful for remittances if it's going to be, if the domestic situation, so the payout situation, is truly digital. So you can use your payment that way. So the Philippines, I think many of you are based in the Philippines or very familiar with it, has really developed a great roadmap on how to make digital part of mainstream payments throughout the country. I'll leave it there for now in the interest of time on that particular slide, but encourage you to look at that particularly when the paper comes out. Just to say, it involves all aspects of society, all aspects of payments, and is supported by things like digital ID and a comprehensive regulatory environment. The second case study, just briefly, is on a service that was piloted with help from International Fund for Agricultural Development from Malaysia to Pakistan and Bangladesh. And this was very much, again, a well thought out process to basically move people from cash-based payments or informal services into formal services driven by account crediting and using mobile agents throughout the whole process. It was very successful, and it is a really good case study to demonstrate what's possible. And I'd encourage you to read the paper. There's a very good case study paper that's been produced by the GSMA and IFAD that describes this in detail. Suffice to say, the costs are very low and there's a lot of other benefits with it. So now, just rushing to the recommendations, we'll come up with 10. I think the first 3 are all around a mixture of sharing best practice. There's a lot of knowledge out there and a lot of things been done. What we need is to have a repository and a centre of excellence, effectively, where people can go to get information around what has been tried and get things to help them, rather than repeating the lengthy learning process that many areas have had to do. Of particular importance, we think, is to develop a digital remittances toolkit that can be used to help countries. It would help them benchmark, but also deliver a series of actions that they could take to see where they are and then introduce changes. An important point for all, so this will be public sector and private sector, is about incentivizing transactions. You saw earlier there's a lot of doubt, let's say, amongst users about shifting from cash to digital. In many cases, incentives are needed, and then they do actually lead to a change in behavior. And there's a lot of good examples, but that's something that really needs to happen. Financial education definitely needs to be there to help people to know how to use it and what their protections are. We've also got to make it a lot easier to bring people on board because it's quite difficult at the moment. We have to make it absolutely as easy as possible. And that includes things like using and harnessing digital ID, amongst other things. I think on a broader technology space, there's a lot of work and support that can be provided to supervisors, policymakers and regulators in the areas of RegTech and SupTech, which will really help to bring clarity to the situation, strengthen the markets, and will help address de-risking amongst other areas. The next recommendation, which I guess is reasonably standard, but I think is definitely worth saying, is that there needs to be more forums for the different parties involved in this area to come together. So it's particularly with the regulators and in the private sector, whether it's banks or money transfer operators or mobile network providers, because what we see is there's not enough communication between them, or there is communication, but not enough plans turned into actions. And I think we're not going to be able to do this without the help of the private sector. So we need to include them in the development process. And then finally, maybe not the most exciting, but is important, is that we need effective interoperability. And here, particularly talking about different categories of business being able to work with other categories. So whilst everybody wants money transfer operators to work together or mobile network operators to work together, what's really important is that mobile network operators can access the mainstream payment systems, obviously subject to all the correct controls, but that we have the mobile and the money transfer operators using domestic payout networks, payment systems, and having access to that, which currently they're generally kept out of. So sorry, I know I've gone through that quite quickly. Just to sort of conclude to say, I think we're at it's a bad moment for the world generally with COVID, but in a perverse way, a good place for remittances. There's more attention. There's definitely a lot more interest. There's a lot more support from countries, and digital solutions are on the rise, and I think we're moving in the right direction. What we need to do now is really harness this and accelerate it further forward. I will stop there, Lizette, in the interest of everyone else, and hand back to you.
Thank you, Leon. Leon will stick around for the Q&A portion of the webinar. I'd like to hand over if you can then share your screen, Leon, I'll hand over to Mayumi, who will then share her screen and share the Bangladesh experience. Over to you, Mayumi.
Yes, thank you, Lizette. Let me upload my slides, just a moment.
Perfect, you can see your screen.
Yeah. Okay, great. Okay, yes. Good morning and good afternoon to all. And I'm presenting about on the topic of data remittance solution to first and last mile issues. In this small presentation, I want to just highlight a couple of issues that the senders and receivers are facing. And begin with, let me start some information on the remittance trend in 3 South Asian countries, Bangladesh, Nepal, and Sri Lanka. Leon has explained quite in detail about the movement of the remittance inflow in different countries, but at least for these 3 countries concerned, as Leon said, the last year in 2020, everybody predicted the remittance will go down. But this year we found this country at least remittance more or less stable, or Bangladesh is even expecting some growth. And this is, to me, this is very interesting. And everybody knows, at least for 3 countries, migrant workers coming back in huge volume from their respective host countries, like people coming back because of the lockdown situation and they lost a job, or just purely this worsening economic situation in their host country. So we know the stock of migrant worker in the host country are decreasing. Nevertheless, the remittance inflow is quite stable and strong. And the reason for this, I think, as Leon is very articulately highlighted, is mostly because of the transfer from the informal and formal channel. This is good movement. However, to what degree the digital channel capture this formal portion of remittance, that's still to be known, and I think it's not as much as probably as we expected. Okay, let me move on to second slide. I see Leo is raising hand. You want to ask, and you have any question or?
Leon, are you asking a question, or is that by accident?
That was a definite accident, sorry.
Okay. Can you raise your hand, please? Lower hand, yeah.
Okay, then let me go back to the slide. Okay, then before talking about the specific issue, I just want to explain the different miles and the stages of the remittance process. So you must be familiar with this, but it's just to illustrate. The first mile is generally a capturing stage for the sender, for the remittance service provider to capture the fund from the sender. And of course, there are different channel, and it can be from the debit from the sender's account or from the credit union account, or sender can bring the cash to money transfer company or from the e-wallet account. And next stage is transfer, intermediary stage, and of course this is also depend on the channel. It can be interbank or interbank transfer, or can be e-wallet to e-wallet transfer. And the last mile is the mile. Some people say the last mile ends at the fund is arrived at the receiver's account. But in my view, the last mile ends when the receiver withdraw the cash. The reason for this was also Leon explained. Because in the rural economy, particularly in South Asia countries, this rural economy is predominantly cash-based. For anything you need the cash, for grocery or school fee or anything. So at the end, the receiver has to find some place to encash the remittance. So this receiver can withdraw cash from bank or credit union or from their account, or they can withdraw the cash from money transfer company. But in particular, this digital channel, this digital channel has to have an agent in this local area for the receiver to encash the remittance. So these are the key stages. And so what is exactly the issue of the first and last mile? To illustrate the issues, I want to show with some hypothetical illustrative example of a migrant worker. Let's say Nepali migrant worker who works in Malaysia, and he is probably not from the capital city, but from the some village in some northern district in Nepal, and he wants to send remit money to his family in the village in Nepal. So, and then he wants to find what is the most suitable remittance channel. So in selecting the channel, he has many questions. So how much is the cost to send the money? This remittance service, is it easy to access? And probably he also might be wondering, that service, is it easy to use? And other question, maybe how he can trust the remittance service provider. And probably lastly, he has to know how his family in Nepal can receive the fund. So with this question, he was also thinking the potential remittance channel that he knows. So is informal remittance, Hawala or Fundi? Maybe second option, in Nepal, this Western Union or MoneyGram, this money transfer company widely available. So he knows about this channel. So he was thinking. Other option is banks. These banks, like let's say state-owned banks, the government-owned Agricultural Development Bank of Nepal, for example, has an extensive branch network, even in the rural area. So he knows about this bank channel. Lastly, he thought of this digital e-wallet channel of eSewa. eSewa is a local the digital remittance service, and it has a partnership with Value in Malaysia. And he knows this e-wallet service because of the advertisement in the local language in Nepal. So with this four potential option, and he was further thinking, what is the most suitable option based on these questions he has? Then he found Hawala Fundi, it's not a good option because as Leon said, because of this movement restriction, this Hawala Fundi is not very easily available like before. So this option is out. The second option, money transfer company. Okay, this money transfer company is operating. It's maybe easy access, and the cost also okay, maybe affordable, and probably his family back in Nepal also find the agent in his locality. So this money transfer company option is possible. The third option, bank channel. This is also possible. Maybe cost is not that very attractive, but it can be accessed, particularly by his family at the receiving end, as well as he can trust this bank. So this is also another option. The last option, e-wallet. Okay, he found this is not possible because, okay, cost is very attractive and it looks very easy to use and probably can be trusted, but this e-saver doesn't have a agent for his family to encash the remittance. So at the end, he probably will choose the formal channel, but maybe rather traditional money transfer company and banking channel. And of course, this is just an example, and a different country has a different condition. So this issue may not be similar in different country, but what I want to highlight here, the choice of remittance channel, in particular digital channel, a lot depends on the knowledge, trust, and accessibility of the sender at the first mile, as well as availability of agent for encashment at the last mile. So these are the key issues that we can expect in the first and last mile phase. So what is the solution of the first mile? Also, again, each country has a different condition. There is no really simple, easy solution, but maybe one possible intervention is to organize a pre-departure orientation program for the departing migrant worker to inform about the availability of a different channel. And in South Asia, the migrant agent company, they organized this pre-departure training, but they are not very well organized in terms of informing these remittance channels. And probably public support, like government support to organize this pre-departure remittance channel might be useful. But just the problem is if the government organizes such type of pre-departure orientation, they tend to recommend the remittance channel with the state-owned banks. In terms of last mile solution, okay, of course, there is no simple, easy solution, but one example of the successful mobile remittance network is Bcash. Bcash it's one of the largest mobile financial service. You probably know. Bcash at this moment, in 2019, has already 31 million registered clients, and I think this is one of the largest client network on this mobile money transfer services. And it started 2011, initially mostly for the in-country money transfer, particularly for the workers in Dhaka to send the money to their the local city or local town. And the success of Bcash, it really depends on its extensive agent network. It has over 230,000 agents in both urban and rural area. And this agent network can be individual or local shop. It's very broad range of agent Bcash accept. And from 2016, Bcash has a partnership with MasterCard and Western Union. So now the international remittance service is also available. And lastly, this is not exactly digital, but as a last mile solution, one of the potential solutions would be a joint partnership between bank and microfinance institutions. This TMSS is a microfinance institution in Bangladesh, and it has over 1 million clients. And NCC Bank is a commercial bank, and they have a partnership. And the TMS client, microfinance client, has access to NCC Bank remittance services, and this is very cost-effective proposition for the NCC Bank, because having this partnership, NCC Bank has immediate access to TMSS's 1 million client network. So this is all. Thank you very much.
Thank you so much, Mayumi. Thank you for that very informative presentation. Indeed, you know, it's very interesting how complex the decision-making process is in making remittances, and it seems like, you know, South Asia is a huge, you know, receiving region, and there's still lots to be done, and I think the importance of also, thanks for pointing out that it's important to partner with MFI institutions as they're also, you know, at the grassroots level. Thank you for that, Mayumi. If you could unshare your screen, would like to turn over the floor to Ali, and Miles will present his presentation. Just give us a few seconds.
Okay, thank you very much, Lisette. And for sake of time, I'll try to be expedient as well. So this is a quick overview of the recently launched Roshan digital account in Pakistan and how it has already been a success story as we speak. Thank you. Next slide, please. Now, this has, first, one slide before, please. Yes. I think one key element, next slide, please. Yes, a key element of from the start has been the support and patronage from at the highest political level, where the Prime Minister of Pakistan inaugurated the RDA, and this was in September 2020. And through this account, overseas Pakistanis were fully integrated with Pakistan's banking and payment system in a completely digital manner and having access to a full suite of lifestyle banking products. And this includes for both conventional and Islamic banking customers. Next slide, please. Now, this definitely ushered a new era for banking in Pakistan. And it was a major initiative of the central bank, that is the State Bank of Pakistan, in collaboration with the commercial banks operating in the country. And these accounts provided innovative banking solutions for millions of non-resident Pakistanis, NRPs, that were seeking to undertake banking, payment, and investment activities in Pakistan. And for the first time in Pakistan's history, the NRPs, the non-resident Pakistanis, are being provided an opportunity to remotely open an account in Pakistan through an entirely digital and online process without any need to physically visit a bank branch. And opening of such an account requires only a basic set of information and documents, essentially eKYC, and this the banks have been completing all the necessary customer due diligence within 48 hours. Next slide, please. Now, in terms of the suite of products that this RDA ushered in, it provided, number one, digital access to all conventional account services, including funds transfer, bills and fee payments, and e-commerce. Number two, it allowed or enabled investment by the overseas Pakistanis in a type of diaspora bond called Naya Pakistan certificate that were issued and backed by the government of Pakistan in both dollars and rupees. This was offered in both forms of Sharia compliant forms and conventional. And another key element was that on these certificates, only a 10% withholding tax on profit was applicable, which was final, and no filing of any tax return was required. And this scheme is offered for also resident Pakistanis who have declared assets abroad with the Federal Board of Revenue. And in addition, this another key product offered under the RD is enabling investment in Pakistan's stock market, as well as opening up investment opportunities in the Pakistani property market, both commercial and residential real estate. Next slide, please. So some other key features is that the overseas Pakistani can choose either a foreign currency or a local currency denominated account, or both. And these are entirely interoperable and enable real-time online conversion from foreign currency to Pakistani rupees. And I think another very key element of the enhanced participation in R&D has been that the funds available in these accounts can be remitted back from Pakistan without any approval from the bank or from the central bank. Next slide, please. In addition, there has been a simplified tax regime made part of this RDA scheme. And this is for now elements of this tax regime under RDA is that for deposits, there are no need to file tax returns on profits, and the profit earned on RDA deposits are tax exempt. And for similarly with transactions, no withholding tax or cash on cash withdrawals or account-to-account transfers by overseas Pakistanis. Next slide, please. Investments in the Nia Pakistan certificates or the bonds also do not require any filing of tax returns, and there's a withholding tax of 10% applied immediately. And also with regard to investments in shares and mutual funds, similarly, there's also no need to file tax returns on dividends and capital gains. And there's a one-time full and final tax of 15% on capital gains, as well as for on dividends, which are received from mutual funds. And there are certain exemptions for other companies. I won't go into that, but generally for most of them, it's 15%. Thank you. Next slide, please. Going further, in these investments in the capital markets, there is no penalty or doubling of the tax rate due to absence from the government's active taxpayers list. So this is definitely a key incentive to draw in overseas Pakistanis. And on investment in property as well, again, very simplified tax procedures, no need to file any tax returns on capital gains on sales of property, and there's only a 1% capital gain tax on at the time of sale of the property and 1% again at the time of purchase. Next slide, please. So what have been the milestones since September 2020's launch? It has definitely emerged, the RDA, as an attractive financial product for overseas Pakistan for Pakistanis in a very short span of time. Remittances through RDA are at $671 million US in just 6 months, and overseas Pakistanis opening accounts from over 100 countries. So it has shown very good dispersion in terms of its outreach, and the numbers are increasing as well at a fairly high rate. Third, the RDA is also helping overseas Pakistanis to not only carry out financial transactions for their families in Pakistan, but also to invest their savings in their homeland through different attractive opportunities like the NPC, the stock market, and property. And last, these flows are generating economic activity in Pakistan and improving the country's BOP by raising FX reserves and making the product a win-win for both the diaspora and the country. Next slide, please. And here we can see the trend in this inflow of 671 million. And it has been going with each progressive month since September 2020. The amount incremental increase every month has been increasing as awareness of the product has increased, which has been actually been done through various road shows and in key destinations overseas where most of the diaspora reside. And due to the successful implementation in the first few months has definitely attracted more and more accounts and more inflows. Next slide, please. So another key reason we can attribute for the success of the RDA is its effective coordination. And the State Bank of Pakistan has been effectively executing this, which can be attributed also to strong coordination and support from the various ministries. And this includes ministries of finance, foreign affairs, Ministry of Overseas Pakistanis and Human Resources, as well as the Federal Board of Revenue. In addition, the participating banks have also played a critical role in the RDA's success due to their continuous efforts to reach out to potential customers and improve the quality of their services. Next slide, please. And in terms of this scheme, the RDA is being constantly improved upon and innovated upon, and there are 3 new policy steps to attract even more overseas Pakistanis. The first one we've already touched upon quite a bit, which is the tax regime around RDA, which has been streamlined, and to allow tax paid at source on profits on the various schemes we described. And thus overseas Pakistanis will not be required to file any tax return. Number 2, with the help of correspondent banks, the cost of transferring funds internationally to and from RDA accounts has been reduced considerably. And third, in response to demand from overseas Pakistanis in Europe and the UK, the government is introducing Naya Pakistan certificates in Euro and British pound, in addition to the existing US and rupee denominated certificates. Thank you. Thank you very much. I thought this was a good brief overview.
Rijat, we cannot hear you.
Sorry, my apologies. Thank you so much, Ali. I was just saying that it's an amazing use case. Indeed, the success that RDA has garnered so far is tremendous. I think that this is something that we should continue to follow and perhaps even replicate in other countries, because indeed it seems like that bringing back money into the country is something that many diasporas are interested in doing. Certainly, I know for many Filipinos abroad are very much interested in doing that. And given some of the functionalities and capabilities enabled through this, it seems that it gives the diaspora more control over bills payment, most especially. I think that's a key area, and also allows them to make their own investments and make that decision versus having to transfer the money to a family member and have them perform the transactions on their behalf, not knowing if indeed these transactions do happen, which is one of the key concern for many migrants. So we've come to the Q&A portion of this session. I don't know if our colleagues have questions for Leon, for Mayumi, or Ali. Anyone have questions for them?
Lijat, I have a question. I raised my hand.
Go ahead, Junkyu.
Yeah, before I go, before I leave earlier, and because of other meeting, I'm supposed to give you guys the wrap up. My current question is pretty much related to the wrap up. And first one to Leon, in terms of that 10 recommendations, and actually, I just would like to want to know that in terms of, because you just portrayed and listed up the 10 recommendations. And so I just want to know, you want to say to us that this is a sequential approach, or this is a priority approach, or you want to say national approach together with the regional approach, and in terms of your the grouping of your 10 recommendation, and also the changing behavior, you think it is very important. But what do you think, and from the research, current research, what makes really played a key role in change, so-called that the digital transaction behavior? And I just want to know in terms of reward and the cost. But reward, I'm not sure, but the cost is specifically, felt by the senders are there. So I want to know, what do you think is really the important one, and to cause the change in the behavior? And the second one to Mayumi, actually, and I think I really like the Mayumi's hypothetical, that cartoon. It's really interesting, but tells the whole story about the importance of the use of effectiveness of the remittances, and not only the cost side. But I want to know that the banking sector role, with your example, and a little bit more elaborated way. And we know traditionally the fintech, it's a little bit getting away or set the distance from the banking sector. It's, you know, it's not really the banking sector. It is a part of the finance sector, but it's not really the banking sector. So I'm just wondering what with that example, compared to that the MTO and the credit card institution like MasterCard, you actually provided a very interesting example, the role of banking sector to boost the last mile connectivity. So the reason I am asking is that depending on the country, ADB study and also the IMF latest study already concluded that the strengthening the banking sector role in less developing country actually provide a significant and a larger benefits to the financial development and economic development together. So in terms of the cost, in terms of the sequential approach, maybe if the country is in a very least developed and with the banking sector dominance, and we don't like the word of dominance, but it is already established. In that case, we would like to think about how to strengthen the banking role. And then if the banking sector has been strengthened, pretty much we can go to the next stage in terms of sequential approach. So I just want to know what your view about that. And then the third one to, Ali, it's really interesting, Ali. It's that Roshan digital account. I think it is really a game changer in many aspects. Like Lizette mentioned, it can be replicated and to other countries if it is possible. But my question is that it's in terms of the user point of perspective, and then you show the statistics, descriptive statistics, and I'm just wondering, what is a main driver, and is there any survey and for the people, the expectant to use these, the RDA is in a very dramatically rising way? Is that only for the cost and only for the tax treatment? Is there any specific survey result to prove that what was a main factor and to make that really, rapid rise in the use of this RDA from the, experts' perspective? And then second question is that, it looks like playing a key role, currently the capital market, and because of the some, government provisions and to allow these account holders to purchase the domestic equity market, the specific account or equity market product. So I'm just wondering whether there is any sort of comprehensive framework or regulatory or framework, to facilitate the link or leverage the positive impact of RDA for domestic long-term capital market development. And I think that is also the interest to many people, and given the Pakistan's, capital market development demand and need, right? So I'm just wondering, after this Roshan account was made or created in September 2020, and whether there is any specific policy and to leverage the positive impact of this RDA for domestic long-term capital market development, and which is my interest. And I should stop here, and just forgive me, I have to leave earlier because of my next meeting. Yep. I should stop here.
So maybe Leon, let's do it in a sequential manner. Leon, Mayumi, and then Ali. Okay.
In the interest of time, I'll be quick. I think the first point about the grouping of the recommendations, I'll clarify this in the paper, but basically there are some that are definitely going to be better off either for ADB to take, or will be much better at a regional level, particularly some of the earlier ones. There are quite a lot that need to be implemented at national level, but need guidance and technical assistance that will need to come from somewhere. And there are some which will need to be implemented by the private sector in conjunction with a national policy. And I'm thinking here maybe around financial education and so on. But there's a lot, actually, many of them are important and need to be done at a national level. That's where most of the implementation is. In terms of the piece about changing behaviour, I mean, I think a couple of points. One is, Chungli is definitely right about the costs. They're felt by the sender. And as we know, in many countries, the costs are now reasonably low. So it's fair to say that cost has an impact, but maybe it's not the be all and end all. It's just a good thing to measure. But what really is driving change in behaviour is the availability of services, particularly digital services, in the receive country. If you don't have a strong domestic digital proposition, you can't drive digital transactions. And the second thing that's really helped is the COVID situation has really started people, or forced senders to change anyway, in particular. And I think what you see is, because remittances are often made as a result of word of mouth, the more people that start using other services will drive people to change. And what we've seen is that when people do change to digital, they don't tend to move back. So that's a sort of snapshot answer there.
Right. Mayumi?
Yes, yes. Junkyu's point is very good point, and I must say that slide I presented is just very simplified version, and in reality, the banks are very active in the remittance market in Nepal, and as far as I know, there are, I think, over 25 private commercial bank in Nepal in that small market, and not in remote villages, but in the mid-sized town, you can always find like 4 or 5 different bank branches. So the use of banks channel is very predominant in Nepal, and even for this digital remittance, the digital remittance like Isewa has a partnership with one of the private commercial bank. Although the branch network is not as extensive as a state-owned bank, so the banking channel is, I think, most promising way of expanding remittance channel. But because of the need of having cash in rural area, the bank has to be there at the last mile agent at this state of digital development in the country. So yeah, that's my short answer.
Thank you, Mayumi. Ali, the last question for Junkyu.
Okay, Lisette, thank you. So my knowledge, I have not seen an official survey for the RDA on its key success or factors or the reasons for its exponential rise, but definitely I am aware of the priorities of overseas Pakistanis, and I believe that this RDA was developed to cater to that. And first and foremost is that overseas Pakistanis definitely want to build a home in their homeland. They want to have so this provides, number one, for that. It provides a very sort of streamlined avenue for investment in property, and not just as investment, but also to probably build a home here. Number two, the rates, I didn't get into actually the rates offered on those on the NIA Pakistan certificates, but they're very high, and that would definitely be a key contributory factor. They're around 7 to 7.25% on the dollar for 3 to 5 year tenor, with just withholding tax of 10% on the profit part. So that is actually very, I mean, even in international standards, and these are completely backed by the sovereign, very, very alluring. So I would think that too is another key element. Yes. In terms of the stock market, yes, because while I developed the Pakistan Capital Market Program last year, I had numerous meetings also on the market infrastructure side, with the head of the National Clearing Corporation, with the depository. And it's actually, again, I have not come across specific regulations to come in place for this, but what has happened is that the market infrastructure in Pakistan on the capital market side is quite advanced. And actually it was the other way around, that the infrastructure is in place, but they don't have the volumes. So that the infrastructure is already catering to much more sort of advanced numbers which weren't there, or which aren't there as of when I conducted the fact-finding missions and numerous other missions in the past 2 years. So this is actually a welcome move, where it will actually generate further activity from the foreign investor side. So where the infrastructure is already in place. on the capital market side, market infrastructure to facilitate these transactions. Thank you.
Thank you, Ali. It makes me want to be a Pakistani so I can invest back in Pakistan. Right, so maybe we have 3 people who have raised their hands. So maybe we'll go Aiko, Tomo, and then John. Aiko, if you could ask your question.
Okay, thank you. If you can hear me?
Yes.
Okay, great. So thank you very much for great presentations. I really enjoyed the Mayumi-san's presentation, which talks about the last mile. So my question is in twofold. For perhaps Leon or Mayumi-san, will you give more examples that addresses this last mile issue in formatting and digitalizing remittances from elsewhere, either within the region or outside the region? And I have another question then on the first mile. And it's important to know that insignificant share of labor migrants are in irregular status, and that wonder if there are any innovative solution for this population in countries such as that host that are major recipient countries of these type of migrants, such as Thailand, Malaysia, Russia. What would be your suggestions? This is to all the panelists. Thank you.
So, Mayumi, would you like to take the question and then Leon after?
Okay, this what is the example of the solution for the last mile issue? I mean, what I could say is it's really, I think, depend on the country. And also, sorry, I can just give very general answer to that question because this issue is quite diverse actually, and it's also really a lot depend on the country's situation. I think it's really key is as Leon said, this how digitize the payment system in the country like Philippines. I think nowadays a lot of people using this mobile money for the daily transaction at supermarket and many retail shops. So, but that kind of environment are not available, especially in South Asia countries. So South Asia country, I think still there has to be a way to have a agent network or some kind of encashment point, which in the most cost-effective way. I think that's the most immediate effective action, I should say. The first mile irregular, frankly, I really don't have an answer to that. Probably this type of, because as Leon said, nowadays, banking sector or financial sector as a whole, this due diligence, its practice is very, very becoming stringent. So if you don't have any valid document, it's very, very hard to access any type of formal financial intermediary, financial formal remittance system. So probably these people that depend on the informal channel, but because of this, the present situation, I'm not really sure that what can be do. I think there must be public effort to formalize this type of migrant worker. I mean, that's much I can say to that question. I mean, I hand over to Leon.
Leon, quick answer, if possible.
Quick answer is a very difficult questions. I think on the receive side, exactly. There's probably a lot of good examples, actually much better in Africa that we can learn from, where really the digital and digital presence throughout the country and using agents has been absolutely essential on the receive side in being able to get these services present. And there's a lot of examples, probably 20 different examples in Africa that could be applied in some way to Asia. But we're seeing progress in places like Pakistan in particular as well, where it's and the Philippines example before, where it's really a complete market change that is required. On the same side, also very difficult. There are some examples, some countries have for low value payments below a certain level, you still don't need ID. And we're talking, maybe $200 or something. There are some others and Ghana is a good example, where the government actually changed the regulations because of COVID and made it that anybody who had a mobile account was then able, or so they had a SIM card, was then able to get a mobile wallet as a result of that. They still needed some form of ID. So ultimately you end up in a situation where they're probably going to use somebody else's account who's already got one, which of course doesn't help with the identification, but from a practical sending viewpoint, that's what they do to use the formal services. Over.
Thank you, Leon. Tomo, over to you.
Thanks. I have a three questions to Leon. My first question is the cost of a domestic remittance, because when we discuss the cross-border, cost of cross-border cannot be lower than domestic. So do you have any sort of indication of average domestic cost? I wonder whether how much lower than comparing to the 6% of the cross-border transaction. And the second question is whether do you have more sort of a detailed analysis of the cost component of remittance? Previously I sort of questioned to the remittance service provider, and they replied that the biggest cost component is the pulling cash in all their network. But given the low interest rate globally, I think probably no longer the pulling cash is not the largest cost part, but probably maintaining the agent network is the biggest component. If that's the case, it's not easy to reduce the cost. So I just wonder whether there's any more sort of a detailed cost analysis. And third one is you mentioned about the regional KYC. Well, it's nice to have, but practically speaking, it is not easy simply because it's not easy to share the personal information through the cross-border. And in that sense, we must have some sort of a mutual recognition of KYC, the personal identification. And but this is also not easy. So that is really the difficulty of having this sort of the regional eKYC. But I wonder how the Pacific Islands or New Zealand is trying to establish this regional eKYC. If there is a good sort of a solution, we can learn. A case like the Estonia and Sweden. Estonia has very much sort of a close feeling to Sweden, so they very much rely on the eKYC system of Sweden, and they don't mind disclosing their personal information even for their medical payments. But this doesn't happen in ordinary cases. So I just wonder how the regional KYC can be established. So those are three of my questions.
Leon?
Yeah, great. Three really good questions. So just briefly, domestic costs, I'm not familiar with any sort of global study on that, but your assumption, I would absolutely agree with, that they're going to be lower than international costs. And I think that where we have seen it, generally significantly lower. So, in the 1% to 2% range seems to be much more common than what we're seeing with the cross-border side. But I think it is an area that needs a lot more attention as well, because there are significant volumes. The second point on the detailed analysis on cost, there is some old work that's been done on that. And I think there's a lot more work being done now on mobile, the cost of operating mobile systems, than there is on traditional systems. But what you said was broadly right. From the analysis we've conducted, the cash point is important because it's the agent side. It's not so much the cost of the cash, it's actually the cost of running an agent network, which you generally need to have because you've got a cash business. And in those cases, the cost of running an agent network is probably 50% of your revenues. But apart from that, the other significant costs are mainly, obviously, your staff, but particularly and systems now, and compliance, as I mentioned earlier. But by far the biggest cost is running agent networks, and particularly where agents are piggybacking onto sub-agents. So that's why if you can remove even one of the links of the chain, you're going to save a significant amount of money. And if you could remove an agent at one end of the chain, you could reduce the cost to operate by 25% in reality. In terms of the regional KYC, I might almost suggest we have a separate call or send you some of the information on that, because you're totally right. I think for the Pacific, where you've got so many countries with such small absolute populations, but big importance of remittance and also no real basis to work from, they're all in a position where you can set something up and develop those rules. And I think the whole legal basis is absolutely a minefield, but it also comes with actually giving people digital ID, which in itself is a minefield. So you're absolutely right to identify the problems, but I think there's a common will amongst all of the governments in that area who recognise the importance of remittances to find a solution that might work. But I think you need and deserve a much more detailed answer than this. So we'll have to try and send you some stuff. And I think it will be worth your while talking to the New Zealand government and others who are actively working on this to get a better insight and hopefully share your expertise as well. So sorry I can't answer it fully now, but hopefully that helps a little bit anyway.
Yeah, thank you. I think hopefully the example of Singapore and Thailand connection, prompt pay and the fast payment, they will be connected soon. So hopefully they can give us the good example, but we haven't seen it yet. So yeah, thank you for the information. Yeah.
Thank you, Tomo. And I think Lotte is also closely working with the governments there, and definitely this is something that they're aiming to do. Shu is on this call, is leading that project. So they're definitely, with the pilot that they're looking to implement, there would be some outcomes there and learnings to pick up from. So lastly, John, if you can quickly ask the question.
Okay, thanks very much, Lisette. Pleased to hear a couple of very quick questions for Ali here. Thanks for the presentation on the incredible growth of the RDA accounts. I was just wondering, do you have a figure on the total number of accounts that have been opened so far? That's my first question. And the second question was, I was aware that the Pakistan Asas emergency cash program that has been operational during COVID, as that is focused on using diaspora and philanthropic funds, I was just wondering if the RDA accounts have been used, or was there any sort of integration with that Asas emergency relief over the past year? Thank you.
Okay, so thank you for that. Yes, I was actually looking for the numbers of number of accounts open, but I couldn't find that information. And secondly, there is no specific mandate under the RDA that this is being, or a portion of it is being channeled to Asas. So that I guess would be an implicit, definitely implicit support would be coming from RDA, because we do know that the government's political mandate is to use the savings of overseas Pakistanis for the social well-being and or for the poverty uplift, but as such, no specific mandate on the Asas side. Thank you.
Thank you, Ali. We've come to we've run over the scheduled time by 8 minutes. I don't think that I'm going to keep you guys any longer, and thank you for sticking around despite the overtime. Again, very fruitful discussions, lots of questions, very informative. Thank you again to Leon, Mayumi, and Ali for your presentations. And if you have other questions that you want to send us, do so via email. You have my details. And have a good rest of your day and your evening. Thank you very much, everyone. Speak soon.
Thank you.
Thank you.
Bye.
Thank you. Bye-bye.
Thank you. Bye.